Hello traders, Douglas here. Today we're going over Bookmap's MBO Bundle. That's their Market by Order Bundle. Now this is the program that contains my favorite indicator in the world, known as their SI indicator or their stop and iceberg order indicator. It also contains Liquidity Tracker Pro, which is a more detailed way of tracking the liquidity in the order book. All right, now before you can understand why these tools are so powerful, you need to understand how they came into existence to begin with, okay? So in the past, everything was run in what's called market by price. And what I mean by that is the data that you received. If you received it from CQG, you received it from Rithmic, you received it from whoever, you were receiving what's called market by price. Now they're showing you the data of where the market's going by price, basically, to dumb it down, all right? It's not quite that simple. But then the CME exchange, the central exchange that runs futures, came out with market by order. Now this is very important because Rithmic data right now is the only data feed that offers market by order. The CME offers it, it's just Rithmic's the only one that actually provides it to their customers through the exchange, okay? So you can't get it through CQG, you can't get it through anybody else. So if you're gonna use Bookmap, you have to have Rithmic data, all right? That is non-negotiable. Okay, so let's look at what market by order is. So market by order is detailed data of the order types in the book. Okay, now there's a couple other differences. So market by price offers you 10 levels, and by levels of price, I mean over here you would have 10 ticks worth of price levels data. Now you can see I've got multiple points here. That's 5 points, that's 10 points, that's 15 points, that's 20 points. So the amount of data that you would receive in the old ways on market by price is so limited as to be unusable in an order book like Bookmap, okay? But with Rithmic data, it provides what's called full depth of market. So I get the information of all the orders in the order book on all the prices, okay? So that is huge, number one. Number two, what market by order does, it provides you detail of the order types, okay? So you can't see iceberg orders, you can't see stop orders in the book, but you can see where they've executed. So it will tell you basically what type of orders are executing. Instead of saying, well, a limit order got executed or a market order got executed, which is all you knew in the past, now you know if they were stop orders, stop loss orders, or if they were iceberg orders. And if you don't know what an iceberg order is, those are special orders that big institutions get to use. We don't have the benefit, us little retail traders don't have the benefit of using them. It's to hide their activity. So in theory, the reason why is they don't want to affect price. Now there's a couple reasons for this. One could be benevolent. They don't want the market to go haywire and crash or something just because they want to place a big order somewhere and then everybody freaks out because of the size of their order. All right, now that is what they would say, we're just good guys, that's what we want to do. Now, of course, another part of that is they don't want you to know what they're doing. They don't want you to know where that order is going to execute because, of course, if you knew that they want to execute a huge amount of orders at a certain price, that's going to affect the way that you trade and that everybody else trades, and then they probably won't get filled at their desired price. It would cost them more money. All right, so iceberg orders are very important because they're hiding them for a reason. All right, they would not hide these orders if it did not matter. All right, so you get to see that with market by order. And then a smaller one, which doesn't affect me too much, but it could depending on your trading style, is you get to know the Q position of your order. Okay, so let's say there was 1,000 orders sitting at a certain price level. Like, down here you've got this big highlight around 3,300. Let's say there was 1,000 orders sitting there and you place your order in there. In the past, you wouldn't know where you were in line to get filled. All right, so if you're number one in line, then as soon as price comes down to you, you're going to get filled. You're the first guy. But if you're number 999, You know, price could bounce around there and fill 998 other orders and then move off without ever filling you. Okay, so that could be really important for somebody, depending on their trading style. Like I said, I don't really worry about it too much, but if I want to see the queue, I can see the queue. And then we'll go back to this just to give you a visual representation of what I'm kind of talking about with all this stuff. This is the old market by price model. This is 10 levels of price, and you see the standard orders sitting there in the book. These are the things that everybody can see, limit orders resting in the book. Now, if you come down here to market by order, you can see that it gives you a much bigger depth, and then it's giving you these little details in here like your queue position. And then of course, once things execute, like I said before, you can see if those were stop runs or iceberg orders. You no longer have to say at this certain level, because there's a double top, if it breaks through that, I can assume that it busted some stops. Yeah, you can assume that, but now you have complete confirmation. And not only that, what's really powerful is not as much that you have the confirmation that those stops actually got run, but you know exactly what price they got run at, basically. And so it can give you a lot better risk reward potential, because you're like, now, it happened right now. You know, like it broke through the price level, and then it took, what, 6 more levels, 6 more ticks, 6 more points, whatever it took past your desired price level that you're looking at. Now it hit the stops. Now I'm ready to go. Now I'm ready to fire my order. That's why this stuff's so powerful. Okay, so we're going to get into the nitty gritty of not strategy. We're going to get into the details of how this indicator works, so you can decide if you want to use it yourself. And then so this is trading view right here. And I just want to show you what we're going to be looking at with a traditional candlestick chart first. So basically what's going to happen is the market in Bookmap is going to go down all day, and then you're going to see this reversal happen at 12:30. Okay, so just keep that in mind, that this is what we're going to be looking at. We're going to be looking at a strong trend down all day long, and then at 12:30, for whatever reason, you get this spiking reversal. There's no double bottom, there's no head and shoulders pattern, there's no traditional price action long-term pattern there. Now you could play, you know, there may be shorter term patterns here that gave you a clue, like it leveled out right here, and so that might be, you know, where you're ready to take a long on it. But why did it spike in this exact spot here, right? There was no warning sign. Now possibly on a bigger time frame, this is a 1 minute chart, but we don't want to get that detailed, okay? I just want to give you the point of what we're going to be looking at. So let's get rid of that. So in front of us, we have the indicator, and the first thing is on the blue is the iceberg orders, and the red are the stop orders. Okay, and let's get this. We need this over here because this is going to show you something important. Okay, there. So now you can see these kind of spikes of where orders happen, where iceberg orders happen and where stop orders happened. Now, a lot of times what you'll see is iceberg orders and stop orders happen in the same spots. Like if there's a big stop, there's a big iceberg, but not always. Like over here, you can see there was this big stop run, but there was no iceberg. And what's really important about the way these work is if you look at it like this, you say, well, there's not, you know, it's kind of squiggly lines all over the place. Yeah, so you have to wait for your spots, and I'll show you those important spots here in a minute. The way you play this is relative to itself. Okay, and what I mean by that is, so if all day long your standard icebergs are sitting in here, and this gives you the, you know, like 500, 400, 300, 200, right? So they're sitting at about 500 is about the average all day long. So if you're getting a 500 iceberg, that's nothing, that's no anomaly on the day. You're like, that's normal activity, okay? But then all of a sudden you get 1,000, you get 2,000, like something like that. Then you're like, oh, a big event just happened, right? A big event just happened. I need to pay attention now because the market's about to move. All right, so you have to play it relative to its own day. Like on a Friday, 300 icebergs might be a good size, and then you're waiting for that 600 to hit. all right, because Fridays are usually slower. Now on Monday, when activity is a little bit bigger, or any other day during the week, that'll probably look different. You'll probably be looking for those bigger iceberg orders, but all you do is compare it to what happened earlier in the day, which is why I typically wait till about 9 o'clock Central, so 30 minutes after market open for me. Market opens for 8:30 for me, to take my first trade. Sometimes I trade earlier than that, but because I need enough of those iceberg and stop orders to have built up to where I can see basically how the market's reacting today. You know, are the big players pushing things around? What size are they putting on? And how do I act according to that? Okay, if I act too early, then I might think that a big event happened and it wasn't a big event. So that's just that. So let's get into the nitty-gritty details. So stop an iceberg tracker. We have a number of options. Okay, now we've got symmetric axis around 0, symmetric axis around 0, and synchronize all axes. All right, so what these do is put it on an even 0 line. And what I mean by that is you've got your 0 line somewhere in here, and you want that to be kind of synced up with itself, so you don't have, if you don't sync these up, what you'll have is the stop, the reds will all be kind of wandering around up here, and the blues will be wandering around down here, and it just makes it visually unappealing. Okay, so you pick a symmetric axis around 0 for both of them, so they both return to that 0 line in the same space. Now, when you do synchronize all axes, the reason why I don't pick that is because then it starts screwing up your the relative size that I'm looking for. So right now, what you're visually seeing is all of these are about the same size, but if a monster comes in here, all right, they need to be able to fit the monster on the page, so it makes everything else smaller relative to it. All right, so if you have, some days you'll have like a monster iceberg or a monster stop, and then vice versa will be small. So let's just say we had a monster iceberg, that'll shrink all these other ones because we're looking at relative size again, right? They didn't really get smaller, it's just the relative size. So it'll shrink all of those to fit everything on the page, and it'll all of a sudden it'll look like there's not very many icebergs because they're all small now compared to that giant one, right? Well, if you have that synchronized axis turned off, then you'll still see the stops. The stops will still be relative to their 500 or whatever they've done, right? But if you click this button, I'm not clicking it because it takes too much time for it to reload. If I click that button, then the stops and the icebergs are synced with each other, okay? So if a 1000 iceberg hits, now it makes the stops look relative to that as well. So even though the stops have only hit a 200 or 300 at this point, it's going to shrink all that, and you're going to think that no stops have ever happened on the day when a 500 stop might be a big play for that day. Hope that makes sense. I wish I could show it to you visually, but it'd be a waste of time. So just don't trust me on this one. Click these two, don't click that one. Now you can create, I don't use these, you can filter out with these buttons, you can filter out certain sizes. So if you only want to have icebergs print of a certain size. So if you only want the big ones to print on your chart, then you could say, you know, I want minimum iceberg of 300 or minimum stop of 200 or whatever you want. But you can also filter out the big ones too. You can say, I only want maximum of this. Now I don't know why you do that because the big ones are the ones you want. So I don't use that. Now reset, accumulate as, it says reset, reset. Stops I always have on the reset. Now what reset does is when it comes along this 0 line, when one hits, it goes up and then comes back to the 0 line. Stop hits, comes back up, goes to the 0 line. That's reset. Reset is good. All right. Now if we go to sum, sometimes I put the icebergs on sum because I like to see what's happening in the overall picture. All right. So as you can see, as price is coming down slowly but surely, you know, over time, even though a big event hasn't happened, icebergs are collecting upward. So it could mean that in the future, you don't know when, it could be an hour from now, it could be 2 hours. I always say it's like turning the Titanic. If the big players are collecting their orders, their buy orders, and which is what this is showing, cumulative or iceberg buys are winning. That's why the iceberg line is going up. It would be going down if the cumulative iceberg sells were winning. So there's more iceberg buying right now. That's why it's going up. That's what the sum is. So sometimes I flip over to that just to see what the big picture is. and then I flip back to reset. The third option is exponential, which is kind of like a goofy version of both. So it would be like a very short-term sum that times out, or a longer-term reset. Basically, it's just, if a couple icebergs fired off close to each other, the exponential doesn't, the reset resets immediately, but the exponential resets after a certain period of time. So if a couple icebergs hit there, it's going to take a while for it to return to the zero line. I just think you're better off with a reset or a sum, or, kind of switching back and forth between one or two. Exponential I see as unnecessary, but you can play with it if you want. So let's go back to reset. So that is the gist of that tool. Now let's move a little bit forward and see what happens. I wanted to show you the relative thing that I was talking about. Over here, this is just showing you what happens in the moment. If one of these was set to sum, this would be the sum total collection. But since it's on reset, it just shows you it'll be 21, but then it'll go back to 0. And then when it hits again, and then it goes back to 0. You get the point. So let's go forward. We hit this big iceberg right here. Okay. And that was about 1800, close to 1900. And so what you saw earlier on the day is your biggest one until then was about 500. But see how everything got smaller now? How all these got smaller because it's got to fit this now 1800 one on the page. If I had the stops synchronized when I was talking about that synchronized tool earlier, if I had that synchronized up to this, it would shrink all these down too, and I wouldn't know what a relative big stop was. And so you see, if you can see this blue up here, it says 2500. All right, so that's saying, hey, we've made room for 2,500 icebergs to show on this chart now, but we've only made room for 800 stops. That's what the red is. Okay, I hope that clears up what I was trying to talk about earlier. It's very important, even if it's confusing just talking about it. And what happens, this is not, surprising, is after we hit that massive 1900 iceberg order, we were already headed down on the day, but then it really starts moving and moves pretty quickly. All these red dots here are market sells. They're very aggressive right now. You can see there's hardly any market buys going on. So the market sells are in thorough control. Okay, so that's what that would do. And just for fun, we'll switch it back over to sum. And you can see we were kind of collecting. We were collecting. Maybe they were buying up positions and then for whatever reason dumped out. They just completely dumped out. So that's the sum. And then over here you can see right now we're negative 1,500 total on the day. Go back to reset. Now I want you to see this live. So I showed you earlier that we had the reversal happen at 12:30 for seemingly no reason at all. Right? Seemingly no reason. It just happened at 12:30. So let's get our play on here. And you will see these little ones printing out. And then it should happen at about 12:30, if you can see the little clock here. We've got aggressive market sellers still coming in, aggressive market sellers coming in. If you were just watching this book, you might think, hey, I need to sell here. I'll be golden. Look at all these sellers coming in. Now you had on the day, the biggest stop run of the day right there. Okay. So if you look back, you can see relative to all the other stops, this is the biggest one on the day. So you know a big event just happened. There's no blue in here though, so there's no buying that started. And now you see the blues coming in. So it's not immediate. You don't fire away just because you saw it as soon as you saw it happen, right? but you know something's changed. We've gone in a massive stop run. Typically, at the very least, when you have the biggest stop run of the day, you're going to get a pullback. It doesn't mean the whole market's going to reverse, but at minimum, you'll get a pullback. Almost always. Not always, almost always. So at the biggest iceberg run of the day, that's when we tanked the fastest and the most aggressive, the biggest iceberg sell. And then we push down into the biggest stop hunt of the day. And you know from the chart I showed you earlier that this is just going to keep going up pretty much for the rest of the day. We went down, we took out the heaviest area of stops. Now, why people don't think that this is important, I don't know. But I get messages all the time saying that this stuff doesn't matter. To each their own. All right, to each their own. I would like to know where major events happen. It just seems like, considering that prices of stocks and futures are based on supply and demand, that a major event of supply and demand might have something to do with where price is going to go. Just me. So you get that. Like I said, you know that goes up. So we'll put that on pause because we don't need that anymore. And I know it doesn't look that dramatic here. But that was, it's because I'm trying to show you the big picture. But that happened around 32.85, and we're already up to 32.98. You know, so that's 13 points, not ticks. That's 13 points, even though that doesn't look that steep on the bar chart. It would look a lot steeper than that because I'm trying to get all of this fitted on here. But yeah, 13 points is nothing to laugh about, and you could have taken it without hardly any risk at all. There you go. So I zoomed in so you could see it better. And you also had an okay iceberg run there too, 731. I mean, that's nothing to laugh at. So that happened with the big stop of the day. Shot straight up out of it. Comes back, hits this level of support, which you can see. You don't have to guess that it's there. And then just keeps going up. I mean, what more do you want? Right? What more do you want out of a indicator? But that's not the only indicator that's on here. The other one is we'll remove the stops and the icebergs, and we'll go to Liquidity Tracker Pro. So this is the Liquidity Tracker, and on its most basic setting, mostly what you're seeing is just what you see in the book. If you see a lot of buyers here, then when price gets closer to that, this will spike up because there's more buy liquidity than sell. This is the cumulative collection of buy versus sell orders in the book, right? So if there's more sellers in the book, this goes down. If there's more buyers, it goes up. You know, it subtracts, and the two gives you the sum total of the two. And right now, overall in the book, it's telling you, hey, there's still negative 111. But this number doesn't seem to matter that much. Again, it's all about relativity. So if on the day, even if you're tracking all negative all day long, it doesn't mean price is going to be going down. It means that when something changes in that standard that the day has set, then price might move. You know, if all of a sudden you're tracking around negative 700 all day, just as an example, and then all of a sudden you see the Liquidity Tracker Pro shoot up to 0 or 100, you know that there's been an 800 shift in the orders in the book. And then that an event might be about to happen. All right. So it's all relative stuff. It's all about relativity. And so the settings on this one are somewhat the same. You get slightly the same. You get this order size. Now this is where the Pro is different from, I think they have a free version. Now the free version just shows you everything that's in the book. The Pro version lets you filter. And although I don't filter on stop and icebergs, I do filter on the liquidity tracker because I think it's very important. And so sometimes I'll filter this up. Now this is just on the ES. Any other instrument is going to have its own settings. Sometimes I filter down to minimum 1, maximum 2. So I'm only looking at dumb money like me. So I'm looking at other retail traders, and sometimes, depending on how the day is going, I will fade those traders, okay? So I'll try to look for areas where they got trapped, like all of a sudden the liquidity crashes, but price immediately spikes up after that. I'm using that as sort of a fade, to say, okay, looks like liquidity jumped in. They got their suckers to jump in because I could see more orders got in the book that were 1 and 2 lots. So I'm just considering those retail traders. And then price is spiking up. So I'm going to get in because I think they're trapped and price is going to continue to go up. Likewise, sometimes I change this to a minimum of 25 with a maximum of none. All right, so if you set no maximum, it's infinity. And so if I set the minimum at 25, then I'm just looking for people that have 25 lots or bigger. So in theory, in that situation, I'm trying to follow with the big boys. All right, and I've used this to some deal of success. It's helped me a lot with the stops and icebergs that are my main source of trading. The strategy mainly revolves around that. But this kind of helps me with confirmation to see where the liquidity is flowing to. And it kind of depends on the day whether I'm doing the 1 and 2 lots and fading those guys or trying to follow the big guys. So I'm not saying I've had that honed down or not yet, but I think it's important. I think it's an important thing to see. And so I do like the liquidity tracker, although I don't consider it quite as important as the stop and icebergs. But there's a couple more. If you want to get a little more detailed with it, let's take off the imbalance. So this is if you want to separate the bid and the ask. All right, so what I showed you earlier was the imbalance, the difference between the bid and the ask. Now I'm showing you the bid and the ask at the same time. And the red, of course, is the ask. Those are sellers. The green or yellow or whatever this is the bid. Those are the buyers. And you can see, big areas where they separate, areas where they kind of come back together, where it's about even. And then that's that. I just think that's unnecessary information. I think what matters is the difference between them. The sum total, kind of who's in the lead. And plus, this is too many lines on my chart. Once I have stops and icebergs, that's just too much to look at. So if I boot those off and I put the liquidity tracker in balance, it's a lot easier. You could change this white to a more faded color to not be quite as distracting if you wanted to, because all these colors are adjustable. So you can change the colors of everything. Let's back up here. Let's remove those stops and icebergs again. This big spike back here. I told you how that changes everything. We got to get that off the page so we can actually read what's going on here. It made everything else too small. Come on, spike. Come on, boy. And back there, I should have pointed that out. You had this massive spike up to, most of the day has been sitting around 500 on either side, plus negative. But back there, you had this massive spike up to 4,000. It spiked up to 4,000 and immediately dropped. And then price crashed after that. And so I don't know exactly what was going on there. I doubt that there was like 4,000 retail traders or something that all their orders piled in at that exact moment and then immediately got out. I don't know if that was spoofing that happened, but it was interesting, and it might have had some effect on the price that happened after that. Yeah, but if you're looking at it like this, there's not a whole lot of detail on the Liquidity Tracker Pro at this point that I would say would help you. I was trying to see if I could get any detail out of that one. The best I would say here, and I do read it like this, divergences. And so you can see that as price is coming down, the liquidity is moving down with it, all right? And this is set to 1 to 2. These are the retail traders. The retail traders are not always wrong. I've learned that by looking at this. And of course, they might not be all retail traders. But so the tracker was coming down with the price, but then it flattens out while price is still going down. And it flattens out and even kind of tracks up a little bit. And then you get this big spike, right? It crashes down real quick, and that's when that stop order happened, and then all of a sudden they spike way up. And so one way that you could read that, I mean, if you're completely fading them, you'll say, oh, they've all jumped in, maybe I need to sell now. But of course, if you're going with the flow of the market, another way you could read that, and like I'm telling you this way now because I don't want you to think that this, even though I think this is the best by far indicator set on the planet, like not even close, you can't just say it doesn't tell you exactly where to buy and sell. There's no magical thing that does that. Right? So you still have to play the game, right? You still have to play the game. Just because that spiked up doesn't mean they're trapped and I go short. Okay? So it comes down, this is where that big stop run happened, and then it spikes up, and then they don't really go back down again. And so when I'm playing it like this, that would be confirmation to me that sentiment is over. They kind of flattened out here. They had one last hurrah, and then right at the stops, all of them all of a sudden are going long, and then that's slowly tracking back up. I would say the sentiment to the downside is over. At least that's the way I would have read it, as long as I was reading it correctly. But that's it. I don't want this video to go way too long, but that is the crux of the stop and the iceberg orders and the Liquidity Tracker Pro on the MBO Bundle. Now it's different for every instrument. I do trade the Russell. I barely trade the NQ, but I traded a little bit and it acts totally different on those. The NQ, I have the most difficult time reading it on. The Russell, the Liquidity Tracker Pro actually comes more into play because there's not a lot of stops and iceberg orders. So on the Russell, I actually use the LTM balance more than I use stop and icebergs just because there's not very many. On the ES, by far, it's stops and icebergs that I use. The liquidity tracker is not nearly as clear. Now let's get to the one major downside to this, and then we'll end the video. The MBO bundle just keeps going up in price. I bought it at $89 a month, which is not cheap, obviously. And as long as I'm in there, it's always $89 a month. But it's been going up every month since then. They just keep moving the price up, and I don't know when they're going to stop. I wish that there was like a way to buy it outright, like a lifetime or something. So it moved up to $134 a month. They're saying that it's going up to $178 a month. That's going to price out a whole lot of people. You can look at that as a good or a bad thing, that not too many people are going to be using this and maybe ruining the whole advantage of it. But of course, the bad thing is that so many people that could benefit from this are going to be priced out, because it's getting ridiculous on the price. So I'll admit that to you up front. It's very unfortunate, but it's also awesome. The tool is awesome. So if that's good for you, if, you could also look at it as, I'd rather pay $134 a month and have enough information that I stop losing money, like people go out and pay $1,500 for training that teaches you support and resistance levels, like for real. And so maybe that $134 a month is not that much if you look at it in the grand scheme of how much money you could lose if you don't have the right information. But that's it, boys. That is it for the day. I hope there's some gals out there too. My analytics don't show very many of them, but there's a few. I got a few comments from some ladies. Hope more of them stop by. All right, guys. Peace out.